Hello, this is the Chart Profit video, approaching 3 hours into the trading day on Friday 17th of February. This is from the pre-open today. We're looking at the E-mini S&P. Buyers have been active recently on the profile. You can see the aggressive buying here, following day here, and this Wednesday here. Their activity has been effective. The market's come higher. There's been no markable response from the sellers. That would be red. We've seen no red on the profile for 14 days since the E-mini found support at 22.65, which is the 4-month point of control, and that was at the end of last month, beginning of this month here. That was the support. We've had basically a higher low. We had a higher low on that point of control, which, as you know, I consider a bullish pattern. Become strongly higher, and here's the green, the aggressive buying. Buyers active, thus far effective. The point of the numbers here, we're looking, along with the imbalances, the green and the red, we're looking to see who is active amongst the significant buyers or sellers, which market participant is currently active. Second question, are they effective? In light of the current sentiment readings that we'll look at in a minute, which are indicating a high level of optimism, some would call it greed in the market, which often indicates an overextended market. What we're looking for, and we haven't seen one of these for a while, is an indication of effective selling. So looking for that on the day frame, the day-to-day measurements. Current numbers that I'm using here at the bottom here indicate just on the day frame whether the buyers or the sellers were active. So for instance here we can see a strongly active day on the part of the buyers, these two highly positive numbers, and you can see the value area, this blue area here, is higher than the previous day, so indicating that the buyers are active and effective. Following day, this was yesterday Thursday, we had intraday a mixture. In fact, let me correct that. I know that that was actually a negative number there. This was a composite selling day, so sellers were active, and yet the value area was within or an inside value area, so ineffective. So we have effective buying here, ineffective selling on this day here. So we're looking out for the first indication of weakness, even before the levels start breaking down, of effective selling. To help me do that, currently experimenting with the tick index, the New York tick index, which we can measure tick by tick or minute by minute, however we need to throughout the day. It's an intraday measure. Basically, it's a net reading of the number of stocks that just ticked higher, less the number of stocks that just ticked lower. What you're seeing here is yesterday's data for the tick at the bottom here, the black bars. This measured on a minute by minute basis. The red line here showing what I call the cumulative tick. And you can see it was a composite selling day, this being the 0 line. And at the top we're looking at a minute bar of the spider throughout the day. So I'm keeping these snapshots each day, this being Thursday, there's Wednesday's tick, and so on, each day by day. And what I'm doing here, and you'll see this next week, is I'm adding this extra information from tick at the bottom of each profile. Not going to offer too much explanation on this right now, but I will. Let's just give you a brief overview now. So the numbers that we have here, based on a measurement that I run on a minute bar, composite measure for the day's activity just based on price, and this one at the bottom based on tick. So again here you can see very much a buying day, value area higher, and buyers active and effective. So let's just look at that bottom line of numbers there, the tick. Start here on the 8th. This was a day of buyers active, followed by another day where the buyers were active, value area higher, they're effective, buyers active the following day, value area higher, we had aggressive buying marked. Same thing the next day, buyers active, value area higher, aggressive selling marked here. Following day, tick indicates a composite selling day. We had an overlapping, in fact a kind of outside value area, so not a lower value area, and that would indicate that the sellers were active, the buyers were resting, but the sellers were ineffective. The following day we gapped higher, the value area was higher, and the buyers were active, so therefore effective. Following day Thursday, we saw the sellers active, buyers resting, but again the value area was inside, so ineffective. So these numbers help me look for the most active market participant on a day-to-day basis, and then we just try to decide has their activity been effective or ineffective. So right now, as I said, considering the sentiment and the overextended condition of the market, the first minor sign on the day frame would be effective selling on a profile. That's what we're looking for. Looking here at the breadth indicators through Thursday, the bottom two indicators are both above their levels, which tell me they are supportive of higher prices currently, and therefore this middle band here representing our breadth system remains green here, has been green since back over here when the price at the bottom here, the price oscillator, went positive. So from sort of this point here we had trend up and positive breadth. It's been pretty much that way since that point. Currently we also have momentum up here as well. The sentiment indicators, let's look first of all at my version of the RIDEX assets ratio, and that was higher on Thursday at 10.4. 10 days ago, on the 2nd of February, the ratio reached 12.15, and that was the highest since May 2015. Here's the chart, and that was at that point there the highest since May 2015, indicating that the retail RIDEX investors are getting more bullish than they've been since that point nearly 2 years ago. You'll notice that as the market has come higher here for at least for a good few days, the ratio actually sold off. Well, let's say fell. It's rallying back a little bit now. Multi-month high in the RIDEX ratio is always something to note. Often indicates the upside is limited. Another reason to look for first indication of real weakness, as we've just discussed. This is the RIDEX bear fund assets in isolation. Bear fund assets are extremely low at the moment, not many bears in this data. But looking at the bull fund assets in isolation, not as high as they have been, certainly here or back over here. We may need to see this picking up quite strongly before we see the market showing any real signs of weakness. And as I've mentioned before, total assets, bull fund and bear fund assets, are relatively low at the moment. So participation right now is not high. It usually is before the market peaks. Quick run through of some other sentiment indicators. This is the public poll from AAII. Bulls percent was actually lower this week at 33.1%. 3 weeks ago the bulls percent fell to 31.6, a little lower, which was a 12-week low. That was here. So bulls percent was at a 12-week low at this point. Obviously the market's come strongly higher from them, sort of thwarting that sentiment. And just 2 weeks ago, week after this here, bears percent reached 34.2. That was a 13-week high. So at this point, 2-3 weeks ago down here, you can see these negative numbers indicating more bears than bulls at this point. In the Investors Intelligence poll this week, bulls percentage was lower at 61.8. But that was down from the previous week's 62.7%. That was the highest bulls percentage since December 2004. Bears percent was higher at 17.6. That was up from the previous week's 16.7. That was the lowest since July 2015. So newsletter writers, extremely bullish, can be an early warning for the market. Usually is. And if we look at the Lipper US fund flows data, they reported equity fund, including ETF inflows, in the week to the 15th of February at 11.5 billion. That's a high inflow for a single week. The 4-week net flow, which is this black line at the bottom here, which was very slow to get started down here, kind of this point here in the market, has come up quite quickly. 4-week flow is currently at 22 billion. And that's the highest since 23.36, which is here. And as I've said, another reasonable size inflow this coming week would lift this 4-week flow number. 4 weeks ago we had a negative flow, so that would definitely good positive flow would lift that 4-week flow number above the previous peak in December to its highest since March 2015. And at that point we could say this indicator is flashing a warning. This is a current 30-minute chart of the E-mini S&P for March. There is a very minor point of control here, just the 7-day at 23.26. Where prices at the moment, that would be first sign of weakness, as I said, pre-open today, price below that level. Currently, E-mini printing above 23.40. As I've said in pre-open recently, there's a target based on the current distribution up at 23.60. If the E-mini reaches that level, be interested to see if there's a reaction there. Main level to watch on the Spider, the S&P ETF, is this one here, 226.16, which is the 2-month. There's that higher low pattern, and we're quite a bit higher. This would be an indication of a major change in trend if we saw price printing down here. Price action in the Russell 2000 ETF IWM has been a relative laggard, but the level to watch, which is closer, that's good news, is 136.70, which is the 2-month. Price below here would be an indication of weakness. So this is a key chart, key level. We continue to monitor that in the pre-open next week. UK's FTSE 100 index closed higher today, a reasonably strong end to the week. The level here is the 4-month to watch, 71.74. This was built in this period here and is now a valid support level. Level to watch on the German DAX, 11.577, which is the 3-month down here. Looking here at the T-bond ETF, TLT, the major point of control at 117.15 a few weeks ago, actually in here, rallied a little higher, migrated up to 119. Since that point, we've seen a little bit of a rally here and then a decline to find support at that level, which is what you would hope for if you are bullish on bonds. Currently we're holding that level. Price back below here, it would immediately put TLT in a weak price location, and we're not that far above it. Just encouraging at the moment that we're finding support there. USO, the oil fund ETF, not very exciting, basically oscillating around and building this major point of control at 11.44. The pattern that we're looking for, as we've seen on some other charts there, is a clear higher low above that level. That would be a bullish indication. Currently it's pretty boring, this chart at the moment. GLD, the gold ETF, has made some progress in as much as it's spent a good few days now printing above this halfway point of last year's low to this high. It puts it in a stronger price location here until it gets above the major point of control, or that major point of control migrates lower until it prints some time up here. Although it's in an improved price location, this would be much stronger above 119.84 and indicate further advance for gold, for GLD. And finally we look at the dollar. This is the dollar index. Managed to rally above its 6-month at 101 here for a day midweek. We're back below that level. Basically what happened, we went up and just briefly tested this halfway point here, which is the sort of natural resistance. We're currently printing back below 101, and that puts it back in a weaker price location. Again, price above that level, good. Price above that halfway point, higher low, even better. So I can't call this chart, but we can look at some other charts to give us a clue. The dollar, if we look at the British pound here, currently printing below 124.78, which is the 15-month point of control. So that's in a weaker price location. Euro FX chart, although it's lower today, is in a reasonably strong position at the end of this week, above its 7-month and above its halfway point off this low. Better for the dollar if we were printing back below that level. Dollar yen, a bit weaker towards the end of the week here. Quite a squeezed chart here. Just want to show you the level from this high, important high, to this low. Halfway point comes in just a little bit below current price action. Price down here below 112.47 would be weak. Currently holding above that level. Finally, the Aussie dollar, a little lower today, but again holding above this extremely important band of support here. So you can see we're quite mixed. What I'm looking for is for all 4 charts to line up in the sense that they all concur in their position, either strong or otherwise for the dollar. I believe at that point we would start to see some kind of theme or trend emerging. A bit frustrating at the moment. Okay, that concludes. Once again, I wish you a good weekend, I think a long weekend, and I thank you for watching.